About 2 years ago, you owned 236 rental properties. And now...
Yeah, when I had a more expensive home that I lived in as a primary, but I rented it out to a hockey player. I moved in, my parents had a second home. I lived in their bedroom. What I was smart about doing was I didn't buy these fancy cars.
You mentioned the hedge funds, the Wall Street money, BlackRock.
If you're a seller and you decide to sell it to a hedge fund, you're causing the problem to a certain degree. You have the right to decide.
Welcome back to another episode of the Austin Zaback Show. Today we have Zachary Kepes on the show. He was actually on the show about 2 years ago. I got to go look and confirm that. And at the time, I want to lead with this. At the time that I interviewed you, Zach, you owned 236 single-family rental properties. And now, correct me if I'm wrong, you're just under 300.
Just under 300, yeah.
And that is a massive accomplishment. So what is that? 65?
I mean, I'm not at 3. I'm probably in the low 280s, but still, there was some good growth. But there's also some dispositions in there, some dollar cost averaging, different things transpired. But last year, if we look at, first of all, thank you for having me.
You're very welcome.
It's always good to rekindle the friendship. And, you know, you're one of the best guys in terms of podcasts and engagement and questions. I've never seen anything like your fluidity. So I'm grateful to be here, and I'm excited about what's going on with your business, which I want to get into for 2024, and the synergy of what we could do together and the relationships cultivated. So again, it's an honor and privilege to be here with you.
I appreciate that. And by the way, for everybody watching, the rental properties is just one accomplishment. I led with that. Zach Kepes, right, is a dear friend of mine, known him for quite a few years now, and he is a serial entrepreneur. Okay, so I want to lead with serial real estate investor, entrepreneur, very well-rounded individual. So make sure you stay till the end of the podcast. This will be a good one. If you've ever thought about buying rentals, doing really anything in real estate, right? You're going to get a lot of wisdom by staying till the end of the pod. So yeah, appreciate you being here, brother.
Yeah, it's funny, you know, I'm sitting here with coffee, and the first time I met you, we met in Old Town Scottsdale. We heard each other's names for a long time. We met at a coffee house, and I remember that meeting right off of Scottsdale Road
with Brendan,
with your partner, with Brendan. I'm like, God, you're a really good guy. You know, I'd seen your videos, and people, you know, you anticipate someone or an energy, and we really had a high vibration and good energy and connection that meeting. So it's cool to see what's evolved in our friendship since that meeting, probably 3 or 4 years ago in Scottsdale.
Pretty wild.
Happened.
Yeah, pretty wild. Yeah, and I was following you way before that, you know, and you're big in the industry, obviously. So yeah, let's start out for the listeners, you know, Zach, just so to catch everybody up here, you know, when did you get into real estate, and why did you get into real estate? Because obviously you've accomplished something that very few people accomplish on the planet, right? You know, let alone obviously here in America, and then, you know, amongst real estate investors, not only do you own, you know, close to 300 properties, but you know, I think a lot of people say that. What I love about you, and we'll dive into this maybe later on in the podcast, is I know without even asking you, your leverage against that portfolio is minimal, right? Which is, to me, very impressive, because I think it's one thing to go have 300 properties and have 90% leverage.
Right.
It's another thing to have that same portfolio with under maybe, let's call it 50% leverage. And we'll dive into that, I'm sure, later. But like, how did you get in, and how did you amass, you know, such a portfolio?
Yeah, so let's back it up. So I'm a serial entrepreneur. It's been in the family, socialized kind of in that environment. My dad has his own law firm. Grandparents did their own, you know, unique endeavors. And when you look at the different career opportunities as a kid, and we talked about entrepreneurship and the way you were socialized with your dad prior to the show, and mine, your mind thinks about, like, I don't like anyone telling me what to do. So by default, I had to work for myself. I don't do well with direction. And I realized that I like controlling things. I'm type A personality. And if you look at trading stocks or, you know, equities or sales opportunities or whatever it may be, there's certain elements that you can't control the whole portion. Not everything you can control 100%, but in real estate, you can truly be the captain of your domain, meaning that you could feel the real estate, you could see it, you could rent it out. There's multiple exit strategies. So I liked having the ability to pivot, to control my future, my destiny through property. And, you know, looking at institutional investments and stocks and bonds, there's no control, right? We're on ticker symbols, but it's the institutions that move stocks, a whisper, a rumor, that stock could plummet 50%. It could go up a bunch, right? There's huge risk and there's huge reward, but there's also the downside risk. I'm a pretty conservative guy, and I've always learned to play the long game. I've never tried to get rich quick or tried the wholesale model and make the quick buck. I'm all about the delayed gratification pretty much for my entire career. So I moved out in Arizona in 2002 to start buying properties with some family and some family capital from St. Louis. And we rode the market from 2002 to 2007. The market imploded. Prices were, at all-time lows. And Warren Buffett says it best. When people are greedy, be fearful. When people are fearful, be greedy. And there's a lot of fear. There was no capital, capital from banks around. And that's when I started buying at the very bottom of the market, raising OPM, other people's money, buying one home at a time, stabilizing it, remodeling it with the same crews. We talk about retention and utilizing, the same people that we work with, which is super important to me because I didn't get here by myself. I got here from the people who believed in me, the OPM, a lot of those early investors and early adopters in my business. And then, of course, the contractors, the title people, the bankers. So I owe gratitude to everybody who's been with me from the beginning. And I'd like to say thanks. Always I'm grateful for them. It's not just the Zach show. It's a family mentality of how you get to, where you are today.
Sure. Were you buying rental properties from 02 to 08, or were you flipping? What were you doing? And did that market crash affect you when that happened?
Great question. So early on in the career, we would buy, remodel, and mostly sell. Okay. There was individual opportunities that I just retained for myself because I realized, I can make prices back then. I remember my first holdings were 1702 West Tucky Lane, I believe, and 2 Section 8 condos there that I bought for $30,000, and they're renting for $900 a pop. Well, if you do quick math, your ROI, your cash and cash return is probably 25% after HOA and taxes. I'm like, why wouldn't I hold these? That's when it started dawning on me, like, why would I sell and make 15% when I can retain and hold and get an exponential return, even if there is some leverage, but unlevered, it's an amazing return. So it dawned on me, I'm flipping all these houses, but I'm watching year after year the appreciation. I'm like, why wouldn't I just hold these assets? So early on, when you want to make that quick capital, if you will, and the guarantee, because you're never going to go broke by taking a quick profit, you sell into the market, you create the capital to then buy and hold. And that's kind of where it originated. So mostly 95% of the stuff we would buy, remodel, and then retail.
Got it.
And then incrementally, as I created my portion of that equity from those deals, I deployed that into the long-term hold model.
And did you have some sort of percentage or allocation that you looked at on, when you got to that point and you're out there flipping, you're making that profit? Was it a math formula to you of like, okay, if I find a property that fits the buy box that I'm looking for as a long-term rental, every time I have X amount of cash in a checking account or whatever, I'm going to allocate X percentage into another asset? Or how did you kind of think about that as you went in the early days?
Great question. I mean, it's like playing Monopoly with real money. So if I could get effectively 20% back, and you can't get that today, let's be clear. But back in the day in 2003, 4, 5, if you're getting 20% returns, I said to myself, I'm holding those. You can't get that in the stock market. Maybe you can for 1 year if you took a small snapshot of that. But playing the long game, if you're getting today, 10% is a great return. But back then, 20 and 25% you could achieve because prices were depressed. But then when you forecast and foreshadow what transpired when the market plummeted, yes, we got hurt, but we weren't over leveraged. We used a lot of cash. So yeah, you lost a lot of money in terms of depreciation. But the reality is we held a lot of stuff and rented it out. And just played the long game. If most people would have stayed the course and played that long Ironman mentality game, they would have been great because the prices when they plummeted at 300,000-400,000, and today some of those homes are 500,000 or 600,000, and you would have paid off that debt almost by now because that was 15 years ago.
Sure, yeah. So you were playing the long game from the very beginning. Were you ever nervous? I mean, did you like back then when all that was? Because I mean, I think it's one thing to look back, right? For people watching, like look back in hindsight and be like, oh, I made the right decision or whatever, right? But a lot of times I think like in the moment, it's not as easy to predict the future. And even in the market we're in right now, like, let's be honest, there's a lot of mixed contradicting opinions out there. If I were to sit and scroll through social media right now, I'd see 10 different people tell me 10 different messages of the next 5 years, right? Like what is going to happen, So like in that season that you were in, did you really believe in your gut? You might not even remember, but like remembering back to, Zach in 2009 or whatever, did you believe in your gut that, hey, in 10, 15 years from now, everything's going to be okay? Like, I just got a hold. Like, you really, truly believed that?
I can't say that for sure, right? That would be a misrepresentation. Hindsight, of course, is 20/20. But the reality is when you're in that volatility, the emotions kick in because you get real money on the table. Things are getting depressed. I think you can only control what you can control, and the rest you leave to the higher beings. But if you're playing the long game and you set yourself up for success and you're not over-levered and you have the ability to stay the course or make some small adaptions and pivots, you're going to be good. What I was smart about doing was I didn't buy these fancy cars, and I had, a more expensive home that I lived in as a primary. But what did I do? I didn't play, I wasn't stubborn, and I wasn't, too proud to go and pivot. I rented it out to a hockey player. I moved in. My parents had a second home. I lived in their bedroom. I remember going on dates, and the girls were like, "You live here in this kind of retirement community?" I said, "Actually, my parents, they live out of state. I'm staying here right now. The market's tough, and I'm being humbled," right?
Yeah.
I think it's always good to be vulnerable and real. Like, I'm not going to stay and say, "Oh, I'm going to stay in this house because I was nervous about the market." Of course, to say that I was so confident, I would have just stayed in the house. But the reality is you need liquidity, you need cash, you need reserves to service debt to make sure you didn't default. I wasn't too proud to go stay in my parents' bedroom, take dates in there, "Hey, mom and dad, I'm coming home." They weren't there at the time.
Yeah.
But I wouldn't be too proud. I owned it, like own your stuff. At the end of the day, nobody cares. Make sure you're taking care of your responsibilities. Be humbled. It's a good thing. Everything happens for a reason. But by pivoting and adapting to a situation and controlling what you can control enables you to get out of that situation.
It's so powerful.
Don't be too proud.
So many people in today's day and age are too proud, though, right?
Of course. Like, I'm going to keep the watch. I'm going to keep this fancy car because I need to portray some image. At the end of the day, I think more people respect you showing that vulnerability, showing that humbleness, by just being real. Nobody cares what car you drive. Just so we talk about your dad or my grandpa. Nobody cares. I think it's amazing. Someone could roll up. You could have a billionaire. I'm doing deals with the guys rolling in a 1980 car where it was dinged up. Who cares? Congrats. You're an amazing person with good energy. I'd love to have lunch with you. I'd love to do business with you. Nobody cares. Get over that stuff.
Especially when you're honest about it, right?
Right.
And you tell people why you're doing what you're doing, and you're vulnerable about it. Yeah, we were just talking before the show about like my dad, and he brags about it, right? Like you were talking about your grandpa, and like it's like, I mean, the guy's got money, but he's bragging about his 1980 Camry,
I love it.
And to a degree, you're like, oh, it's actually pretty cool. Like I kind of like, and now that I've gotten older, I'm like, dang, like that's really cool, And so I'm totally with you. I think that people, the younger people of the world, need to do what you did, right? Like, and I was telling Moshe, even my fiance, for people who don't know, the other day, I was like, look, like really to build wealth, right? Like anybody could do it if they would just give it a decade of living below their means.
Yep.
And reinvesting their profit into wherever they make their active income, taking, a large percentage of that, reinvesting that, but doing it for at least a decade, right? I'm like, if everybody would just do that the problem is that people, they have 1 or 2 good years of active income, and then they want to go upgrade their house and their car and their everything, right? And we've all been there, I think, to some degree. But to your point, how quickly can you learn and adapt, right? Especially if we're about to go into a time where there might be a good buying opportunity.
Right. And can you play the contingency game, right? Like if you go into every investment and say, what if COVID, happens again? What if another war transpires? What if interest rates go to 9 or 10%? What transpires? And how are you locked in and mitigating that risk on these investments? And if this happens, what can you do to ensure success?
Yeah.
And if you play that mentality versus, okay, I can borrow money cheap today, but it's a variable rate, well, that investment could explode if that variable rate is a 6-month, for example, and you're planning to hold this long term and you can't get the ability to refi because you paid too much money for the home. You're setting yourself up for failure.
Yeah.
But do you have friends or family or OPM that can immediately take you out of that position and say, hey, I want a 10-year note on this and a first deed of trust? What can you do? And talking about, by the way, OPM and humility and just keeping it real. I remember the first investor in my company, one of the largest investors in my company, Mark Beard. Amazing guy, passed away a couple of years ago. Extremely grateful for him and his family and seeing and believing in me. When I picked him up at the airport, and it was through a local agent who I met at Safari, Michelle, she goes, I was trying to sell some notes at the time to raise some additional liquidity. And those notes were yielding 10, 11, 12%, first deeds of trust. I said, Michelle, do you know anyone interested in a first deed of trust notes? I'm looking to sell up their performing notes, their first deeds of trust, they're 80%, 85% LTV, so they're very good notes. She goes, I'm not sure really what that is, but I know some high net worth people. I'm happy to talk to them about it. Gentleman calls me, goes, I understand you have some notes, first deed of trust. Tell me about the real estate. He goes, I'm very intrigued. I'm going to fly out. I know nothing about this guy. I pick him up in my Ford Explorer Sport from 1990. The car's disheveled, probably 200,000 miles. I don't even like most people. If you're raising capital, you're going to put on the suit. You're going to do all this stuff. That's not me. Yep. Be yourself. Be authentically you. People will pick up if you're trying to represent something you're not. I honestly didn't even clean the car. I think I had comparables in the front and water bottles. That's just me. Like I'm all over the place, but it's just me. So I pick him up at the airport. I open the door. I think papers fell out. Yeah. He's looking at me in the car. I'm not driving some fancy Mercedes. My original car from high school. Yeah. I'm driving around. I show him the assets. He meets my guys. He sees the level of respect and engagement with the crews and the volume of what I'm doing. And I take him to like a Middle Eastern restaurant. I remember on the west side, 59th Avenue and Olive. And we're sitting there, and he says to me, I'm interested in buying all your notes on one condition. I go, oh, okay, what's the condition? If I can invest in your company. I said, well, whoa, let's not get ahead of it. We've only known each other a couple hours. He goes, I just like the fact that you're like me. You're not putting on some show. You're humble in terms of what you're doing. I see the way you work. You're an animal. You don't even have enough time to wash your car or do it. I go, that's just not what I am. Like, I'm transparent. So if you're vulnerable, you're humble, you're transparent, you recognize, be authentic to yourself, good things are going to come your way. People pick up on that energy. That's it. And so it's interesting. Most people would do the opposite. They'd put on the suit. They'd maybe rent a fancy car. They'd be excited, all these fancy presentations. No, do what you do and just open your books. People will connect with that.
They will. Yeah, man, I love that. It's a great story, by the way. I don't think you told me that on the last time that we talked. Phenomenal.
I've shared that with very few people, but it's just, when I look back, I smile. He's amazing. And he's like, and this guy's worth a lot of money. They have a NASCAR team, just a wonderful human being. And he never like bragged about him. No, people with money don't talk about it. They just want to connect with other people. I never said to him, what's your net worth? What's this? And at the time, I remember too, we had to do an operating. I'm like, I'm spending $25,000 on an operating agreement. We haven't even done a deal yet, you know? But I believe, again, everything serendipity, things happen for a reason. When you're connected to the right people. If you're always asking for opportunities and manifesting and projecting certain things, good things are going to happen. It doesn't just come through osmosis. You got to put it out there. Your big merger, which we'll get into, all this stuff doesn't just happen overnight. You project it. You kind of throw some things out there to talk about it. And then the higher beings and serendipity and energy and all that stuff comes around. Yeah. That's how it works.
Every single time. Yeah. No, there's a bunch of stuff I want to dive into. One of them is, for anybody watching, they might be wondering, I know there's a lot of contradictory information on the internet, really in the world in general, in like, when we look at multifamily versus single family. And I kind of want to go down that rabbit hole for a minute.
Sure.
I know you're a big single family guy. Do you even own any multifamily?
I own zero. I had owned a complex on 2135 West Cypress. I believe it was a 62-unit complex I owned back in the day. And honestly, I made a few $100,000 on the deal. But I'm a huge advocate because I know what I know. I stay in my sphere of competence. I'm a single-family expert. So the multifamily, of course, you can make a lot. But multifamily right now is getting crushed. Yeah, it is. Right? It's getting crushed. So
yeah, and talk to me more about that, right? Elaborate on that. I mean, why did you pick single family? Did it just happen to you, and then you kept going with it? And then what are the benefits of single family? And are there any disadvantages? I mean, let's be real, right?
There's tons.
Property management. I mean,
100%.
You got to get into driving around the valley, right?
So from economies of scale, you get a much greater economies of scale with a multifamily. If you could have 100 or 200 or 300 doors all in one location, a handyman, they're not driving around the whole town. Software and management and units, it's more simplistic. You pay one property tax bill, maybe it's a master meter. There's so many benefits potentially of owning multifamily, but for me, I know what I know. I'm not an expert in multifamily, but I believe that in terms of appreciation, I like the single family model better. I mean, you're looking at, rents right now on a multifamily, on a 2-bed, 2-bath, people could be paying $2,000 a month. You could put a tenant in a single family, for $2,300, $2,200. Who's going to rent? If you're a tenant, you have an option of renting an apartment, or you have your own single family home with your own space and land and separation. What would you want as a tenant?
Single family all day long.
I think there's always going to be more demand for that when prices are pretty similar right now. If you look across the board, I'm shocked to see how expensive the multifamilies. People don't like living on top of each other. Maybe in certain areas in New York or more densely populated areas, but in Arizona, I just found that if I'm watching unit per unit, long term, which I'm all about delayed gratification, playing the long game, I believe you get more value out of a single family home than you do in a multifamily. Yeah. Now, you could talk about there's benefits of easier leverage and financing with multifamily versus single family for sure. But one of the things that I like about the single families, I think there's more barriers to entry because these big institutions and big, international buyers, they want to deploy a lot of money at once. So that means that market is more saturated in terms of going after these multifamily assets, which means that the more competition is going to drive the prices in terms of acquisition. They're just going to drive the prices up, but then they're going to get a fixed yield. Yeah. Right. So some people, they were fighting for cap rates of 3% and 4% just a year or two ago. Who would buy a single family to 3% cap? Even hedge funds who were buying single family, which was a lot of talk about pushing them out of the business. You can't afford to buy a 3 cap on a single family,
right.
but they're paying it. They were happy for a 3% return. Cost of capital today, prime is 8.5%. Explain to me how that works. People are getting crushed.
Yeah.
If you paid 3% on a multifamily, you are hemorrhaging money. But single family, if you were smart and you bought good cap rates at a value-based price and not paying 100% of anything, it's important to whatever you buy with equity and not just buy it because you perceive appreciation.
Sure. Yep.
Buy always with equity so you have the ability to pivot and adapt. Then I think playing that long game, you're going to do better. That's my opinion.
You mentioned something about, the hedge funds, the Wall Street money, BlackRock, whatever, getting pushed out, the government trying to push them out of the single family market. What do you think about that? Like, what is your opinion on that? Is it a real thing? Like, should people be paying attention to that? Does it matter? Like, are they good for the market? Like, what's your opinion, Yeah.
It goes both ways. Look, there's always, the heads and the tails perspective. It goes both ways. In one perspective, for appreciation, it's good for people that currently own properties because there's so much demand, and it forces even, entry-level buyers to bid out, and they're competing against cash buyers, Wall Street, and these big hedge funds to buy what you drive prices up. Conversely, I care about these first-time buyers, and let's not forget this is a really important situation. If you're a seller and you decide to sell it to a hedge fund, you're causing the problem to a certain degree. You have the right to decide. Do you want to sell? I mean, a lot of times it's easier to these cash buyers, but they want maybe a small discount. Maybe they're paying retail. Or you choose, if you truly care, and I care, if there's a money between selling to a hedge fund or to an end user, sell to the end user.
Sure.
That's kind of the liberal part of who I am. So I care about first-time home buyers. I give my tenants the option to buy the homes at any time. So there's options that I provide to the market. I see it both ways, right? It's good for the market in terms of appreciation. It's bad for first-time buyers. But I think, too, if you're an astute buyer, you need to, take the course of action to compete against those guys and appeal to the emotional side of people. At the end of the day, most people have big hearts. I truly believe that. So if you're struggling to get that home, you need to engage those sellers and tell them, why sell to someone who doesn't care about you? Sell to someone, we want to live here. We're going to make this our future. There's a lot of letters that were written in the times when you're competing. Hey, this is my family. Here's a picture of us. This is my dog. Here's my 2-year-old kid. How could you not sell to that person? We always have options. So if you truly care about it, and you should care about all these options, and it's not for sure, they're introducing a bill, I believe, through Congress that if passes, they would give the hedge funds about 10 years to sell into the market, or they achieve some sort of fine. I don't know the finite details of the deal. But if you truly care, we all have the ability to make a decision who we sell to.
Sure. Yeah. So we talked about, and I love the way that you explain that, because there's a heads and a tails to everything, right?
Absolutely.
What now is the likelihood that it gets passed, right?
I don't really see it happening.
Okay.
I really don't. I mean, I'm not big in the political stuff and this, that. Anything could happen. But again, I say to myself, I think it's also even single family owners, if you have more than 75 units, they impose some sort of tax.
Sure.
So in that respect, I'd be pretty upset. But don't you think all these smart hedge funds would have a pivot strategy to say, okay, let's deconstruct this and sell them off to individual people, or people could do 50 units at a time? I mean, I think there's ways around everything. In terms of taxation, they would figure out what to do, but also it would hurt them because if they, I don't know the exact percent of what they own in terms of single family, but if they flooded the market simultaneously, they're just shooting themselves in the foot.
For sure.
And there would be an overflow of supply in a short-term basis. So, I mean, it would have to be an incremental disposition strategy. If I'm not competing against hedge funds, it's much easier for me to buy in the same respect. But I've never had a problem buying because this business, and any business, is about relationships. So bring on all the hedge funds.
Right.
They're not the people that are going to interface with the sellers, these wholesalers, or guys like you that are moving inventory. You guys have a decision who to sell to. Sure, it sounds sexy. Hey, Austin, we have $1 billion we want to deploy. Call me on your deals. But it's also like when an end user, we just spoke to an agent who has ready and able buyers coming to the table. I want to serve those people first. You heard it here. I'll put it online. I will always sell for the same net differential, maybe even a slightly less, to an end buyer.
1,000,000%. Yeah. And a lot of times working with the hedge funds and the big the BlackRocks of the world, they're not fun to work with, right? I mean, I'll just be straight up. I mean, they're a pain in the butt to work with. I mean, I've got a client right now on the retail side that he's just a normal home buyer, end user. He wants to buy a home. Open Door's the owner. And it's a pain in the butt to work with them, right? I've got to get on the phone with some technician. I can't even call anybody. I've got to text them. I get a support ticket.
Right.
And they're like, I'm like, are there any offers on the property? They're like, give me a minute. Send me the ad. I'm like, dude, it's just an algorithm to them, right? At the end of the day.
It's probably AI.
Yeah.
You're talking to some AI.
Right.
Hello, and thank you for your interest on 702 Marlboro. Okay, great.
Yeah.
We care about relationships. I'd rather get any deal to the finish line, get compensation to a local agent, help them and their family, help an end buyer. It's karma, man.
For sure. Yeah.
And you talk about fun, right? At the end of the day, like, it's so stiff working with institutional Wall Street money. But it's so much more fun. I walk in your office.
Yeah.
There's energy. There's smiles. Let's go wake surfing. Like, I want to do business with people you can have fun with. It's not about a deal. It's about the relationship. It's about the longevity of that, symbiotic energy flow.
Sure. Yeah. No, I couldn't agree more. Yeah. And today's a slow day in my office. You got to come back. You came on the wrong day for energy.
I've seen it all. Yeah, I know. Yeah. You don't have to tell me.
Slowest day of the year today. I'm not even kidding you
right
now. I want to dive into really quick too, like, you talk about you used to be able to get a 20% whatever in Arizona, right?
Right.
I was talking to Doug Hopkins the other day and on the phone, and we were just talking to each other and having a conversation. And Doug said, and hopefully, Doug, you're cool with me saying this, but Doug's like, hey, like, why don't you go look in the Midwest if you want to build a big rental portfolio? He's like, at one point in time, buying in a state like Arizona made all the sense in the world, to your point, right? Yep. He's like, it is very difficult to if you want to build a couple 100-door portfolio in Arizona right now. He's like, it might not be your best option, right? Now, not that it can't be done. That's not the argument, but it might not be your best option, right? So, like, for a viewer out there that might live in California, Arizona, Vegas, Florida, maybe any market where you've got all this crazy appreciation where you're paying $300,000, $400,000, $500,000 for a 3 or 4 bedroom, 1,500 square foot home. Do you recommend, like, for somebody who's watching that maybe is 18, 19, 20 years old, they want to build a rental portfolio, right? Do they try to do deals in that market, or do they go to an Alabama, somewhere like that and pick up a door for $100,000 that'll rent for $1,100 a month? I don't know. It's just a number, right?
Yep.
Like, what route do they go? And
I hear this all the time. First of all, Doug's an amazing guy.
Yeah.
He's a very close friend. We do a lot of business together. He's on the TV, so I source properties from him. So shout out to Doug. Great guy. The answer is complicated. For me, I practice what I preach. I put my money where my mouth is. I like buying. I'll take a lesser yield to stay local than go outside, because the problem is trust. Once you get too many other people involved in your business and penetrating your business, you lose control. We talk about being the captain of your domain. So today, you're exactly right. You cannot get a 20% yield unless it's some anomaly deal. You're direct to seller. You create value by maybe building an ADU or whatever that may be. But just on a generalized deal, if you can even get a 10% yield in Arizona today, you're doing pretty good. And so you're not making, especially if you're using leverage, if you're borrowing money from the banks right now as an investor, maybe you're paying 8.5. If you're getting prime, it's not even terrible. So 8.5. If you're getting an 8.5, someone say, well, why would you even buy that deal? Because they're forgetting one major thing: equity. It's by buying diligent, smart deals. You marry the house, you date the rate. Super important. I've heard other people say it. I like put it in my repertoire. Super important. I believe rates projected to come down in 2024 by playing the long game. If you buy good legacy assets that will perform, if they perform at 8 or 9% today, over time rents rise, right? So the yield will go up over time by playing the long game. When the rates become more attractive, you simply refi and lock it in long term. Forget about these variable stuff. That's dangerous.
Yep.
Get solid rates, and then you got good arbitrage, right? If the rates come down to 5 even, but now you're getting 8.5 and you have a 3% or 3.5% spread, that's pretty good. But once you start capitalizing on the existing equity, which is the key component, I can go out and buy a couple hundred homes in Indiana or Georgia and places that are, the prices are lower and the yields are higher. Maybe you're getting 12 or 13 there. But by the time you pay property management, by the time people potentially steal from you, that say, oh, you need an AC and there was no AC problem, or tenants don't pay you. You have a hard time controlling and sleeping at night. I believe there's value in sleeping well at night, not relying on multiple people for your business. I'm not a big delegation guy, to be honest. I built this, by working diligently and kind of doing everything myself. So once again, more people penetrate your company, the more risk and exposure you have for people, cannibalizing your yields and not working. But conversely, if you live in the Midwest and you have opportunities in your own backyard, I like people to see it, feel, and touch it. How do you buy deals that you can't see? I've said this time and time again. You can go to Burger King and go buy a burger. You're not going in the kitchen to inspect it. It's $8. You buy a Domino's pizza, bring over the pizza. If it's bad, you throw it out. When you got hundreds upon, maybe potentially millions of dollars on the line on a transaction, Don't you physically want to be there?
Yeah.
If you're buying sight unseen, you're missing something great. Oh, right now, you get a 10% return. You have a Section 8 tenant. You set it and forget it. It doesn't work like that. You fly out there, and all of a sudden you're like, wow, there's $30,000 in deferred maintenance. Now you're playing catch up. You're starting the race behind the line, not in front of the line. I want to start ahead of the line by buying good assets that we can see, feel, and touch with equity and be ahead of the curve.
Yeah.
Not behind. So if you're just buying based on potential yield and return, you're missing major components. What about all that deferred maintenance? What about that structural crack when you try and sell that in the future? And lastly, why I like buying in places like Arizona, when you talk about migration and talk about the influx of people moving here, population growth, housing shortage, is the appreciation. So a lot of those other places that you're getting potentially a higher cash-on-cash return, and you are getting a higher cash-on-cash return today. But long-term, if you're buying with equity and the appreciation in a market like Arizona will offset that lower yield short-term. By playing that long game, if you set it in 5 years from now, what is that asset worth in Indiana that you paid $75,000 for that you're getting $1,200 a month? Is that asset going to be worth $90,000 in 5 years, $85,000? What's the demand? What's driving that price? You have to look at the macro as well as the micro on these investments. Conversely, I believe these assets in 5 or 10 years in Arizona, we should see some significant appreciation.
Yeah.
You already bought with equity. You're still getting a pretty good return. You do a good refi when rates do come down for the long-term play. And then you have the ability to cash out, to redeploy that money into new assets in this market and play the long game.
Yeah.
So the final answer is I like buying, taking a lesser yield short term, but buying strategic assets that I can see, feel, and touch, that I can visit and engage the tenants and control. And I believe in the long-term play of appreciation in the appropriate markets.
If you could find a legacy asset, you're somebody watching, they can find a legacy asset in a place like Arizona, for example. They know it'll appreciate. It's a phenomenal asset. But at the 8.5% or 9% rate that they're going to get right now, maybe DSCR, whatever it might be, they either break even or negatively cash flow, but they're making active income. Let's say they own a business, they're making 100, 200, 300K a year. Would you ever touch an asset if you're that person that because I've had people on the podcast that are like, hey, Austin, I make $300,000 a year. I'll buy an asset here or there that loses $200 a month in cash flow at a 9% rate, knowing that rates will come down, I'll eventually refi, and it'll be a phenomenal decision. I'll fork over the couple $100 a month. Would you ever do that, or does it depend situation by situation? Now, obviously, if you repairs and maintenance, you're probably going to be even lower than that, obviously, but I suppose it depends on the person.
I think it's a great question. And the short answer is yes, I will, given the fact that that asset has equity that I'll recapture. So let me just break it down for you more simplistic. I will take, let's say I deploy, I use lines of credit to deploy. So let's use, for example, 8.25% cost of capital. You buy a $300,000 house. I pay $300,000 for that house, but it rents for, let's say, $2,000 a month. So that's 24. Quick math, with taxes, insurance, and miscellaneous repairs, you're right. I'm going to lose, let's call it 1 or 2% in terms of cash flow.
Yep.
So I'll lose, let's call it $300 a month. The key component is I pay $300 for the house. Let's say I put in $50, so I'm all in at $350. Cost of capital again $8.25. I'm only renting it for $2,000 a month. But there's one factor. That home, if I was going to sell it immediately, is worth $400,000, for example. Now that's the key component, because if you're buying with equity today, you have the ability to adapt and pivot. If I'm going to stabilize that asset, so I'll take the negative $200 or $300 a month, but I recapture. If you fast forward a year and you're playing the long game, and I decide, okay, let's assume there's no appreciation, but let's assume there's no depreciation. Let's say that same asset's worth $400,000 a year from now. I go to sell it. It costs me, I'm licensed, so 3% to a buyer's agent, 1% closing costs cost me $16,000. So quick math, that's $384, right? But I'm into it $350. I've just recaptured $34,000 to my net worth, but I just spent $300 negatively to pay for and offset that negative cash flow. So basically, I've gained almost 10% direct yield, cash on cash, because I made $32,000 in my pocket if I was to sell it then, and it's 20% tax versus 40% by flipping that asset. So the answer is absolutely. I'll buy a negative cash. I'll spend $300 a month to make $34,000 fast forward in a year from now. I'm playing the long game. I'm not worried about that 300. And thankfully, I have other assets give me a much higher yield to support that. I wouldn't get over levered to do that. So, I'm banking everything on this. If I don't have that $300,000 a year, other income, or I'm not stabilized and have reserves, I would not do that deal. But if you're comforted in having the liquidity to support that negative cash flow, and you've got good equity, then yes, I would.
Hey, really quick, I'm sure you already know, but I've done over 2,500 wholesale deals in my career, and me and my team consistently do anywhere from 1 to 2 wholesale deals a day. If you're looking to get better at wholesaling, or maybe you're brand new, you've never wholesaled a deal, I would actually love to coach you. I would love to mentor you, and I would love for you to be a part of our education program. All you have to do is go to www.flippinsimple.com, or you can find a link in the description down below and book a strategy session with my team to see if you would be a good fit for our coaching program. Again, this is our exact strategy and formula of how we are actually able to go out every single day and do anywhere from 1 to 2 wholesale deals a day. Nobody's talking about what we're doing, and I really look forward to coaching you and mentoring you. So again, go to www.flippinsimple.com. Now let's just go ahead and get back to the show. Love the answer. Phenomenal answer. So somebody trying to build a portfolio right now, the key thing that basically my takeaway from all of this, right, is that they need to find the best deal. Right, it's all about. I mean, the old saying, "You make money in the buy." Right,
absolutely.
They've got to find the right deal. We have a coaching program. Obviously, I talk a lot about underwriting, right, and comping, and a lot of other guys in the industry talk a lot about that. You talk a lot about that, but I'm like, whether it doesn't matter if you're wholesaling or you eventually want to buy Airbnbs or you want to flip or you want to own rentals, you have to get good at underwriting, right? If you're not a good underwriter, forget it, right? So get good at underwriting, build the relationships, get the deal, and kind of the rest will follow. I mean, correct me if I'm wrong.
I agree 100%.
Yeah.
Build the relationships with people who are active in your market, understand, maybe do some simulations and say, hey, Austin, can I see the last 4 deals you bought in your portfolio? Because, you could be a mentor for a lot of people, or you do mentor a lot of people. Okay, so let me analyze those deals. Why did Austin buy this? What is the cash flow? What is the equity? Yep. Do not buy a deal for just cash flow. There better be, if there's not equity in the deal and just cash flow, run for the hills. I'm an equity guy. If there's no equity, I buy on 4 pillars. One, is it a legacy property? Do I want to own this thing long term? We talk about legacy, super important. What is the cash on cash return? What is the equity after stabilization? And can I buy the asset less than replacement cost? If it hits those 4 pillars, there's no emotion involved. Zero. Right. If it hits those 4 pillars, I'm a buyer. Wow. Simple.
Yeah, truly incredible. Everybody should write that down. And rewatch that, right? You got to have the pillars in order to be a real estate investor, no matter what you're trying to do, right? And I think it's truly incredible. Would you go right now in the market that we're in today? And where would you go? I mean, obviously you're using a line of credit. You've got a big portfolio. You've got the ability to do all sorts of unique things. I'd imagine for somebody watching that might not have the ability that you have. But wants to get going, they don't want to wait. They don't want to just sit and wait until 2027 or whatever, right? Do they go DSCR? Where do they go to get the money right now? Do they go try to go private money and find people on bigger pockets, or go to networking events and figure out? They're if you're just a guy, maybe you have a great deal, right? It's hey, they're watching. They're like, Austin, I've got a great deal. I'm looking at it right here. It's 60 cents on the dollar, right? But I don't know where to get the money. Where do they go?
The money always follows the deal. So first and foremost, don't worry about anything else. Learn how to underwrite. Learn the fundamentals of the business first, right? Become knowledgeable. And there's so much free information out there. People are spending, zillions of dollars on mentorships and this and that. There's so much good at watching your podcast. They could learn pretty much a show or two what to do. Dive in, get the free information, and then go start chasing the deals and tying up a deal. Make sure you get it tied up. From there, I want you to figure out how to pivot. Can you retain that? Can you get a DSCR loan? Can you get OPM will come for sure. Hard money, if you're buying a deal 60 cents on the dollar, you can get hard money. Yep. Or you can partner with somebody in the industry. Find an Austin, find somebody in your, area that is highly qualified. In a worst case scenario, if you can't get your own money, they will joint venture on that deal, or somebody will loan you that money for sure if you're buying that cheap. If ultimately the very end of the transaction, you can't get the money, you can always, if you're buying at 60 cents, that deal's so deep, you can always wholesale it. In a worst case scenario, I love to see people all the time. They call me and they say, Zach, do you want to buy this? I said, why don't you buy this deal? I always ask them that. Now, right now, I'm blessed. I don't need to buy another deal. How can you pivot and retain that deal? I'm your last, ditch scenario. I'm your life jacket jumping off the boat. I don't want you jumping off the boat. I want you to find the captain. I want you to, take shelter. How can you retain that asset yourself to truly build your net worth? So the money will always follow the deal, but project, leverage the free resources, the social media. Go to any real estate meetup in your area and see who's doing deals. Call those people and say, hey, Zach, Austin, when I get a deal, would you want to joint venture with me? And guaranteed they will. Because if you're getting a great deal, the money will always follow, especially in a first deed of trust. Or they will send you somebody who can give you a hard money loan or OPM, other people's money. There's always an opportunity around the right property.
Yeah, the money will follow the deal.
The money will always follow. But you need to put yourself in a position. Don't, again, using osmosis and hope and pray.
Yeah.
You need to show up. You need to go belly to belly. You need to meet people, go for coffees, go to these meetups. Go when other investors, they show off their homes and walkthroughs. You show up to those things. Those are the people you want to interface with. People that are, rolling up their sleeves and getting dirty. You need to get in the dirt and get dirty and meet those people and engage. Because from there, all your resources are one phone call away legitimately.
Truly phenomenal advice. Talk to me about your prediction of the market. We're going into 2024. I talked a little while ago about the contradictory information out there. However, I've seen a lot of congruency in the fact of 1 year in particular. I think a lot of people feel the same about 1 year in particular. After that, I think people have mixed opinions. And that year is obviously 2024, right? And I think the congruency that I'm seeing is 2024 will be a great year for the real estate market. Interest rates will come down. We're going into an election, blah, 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 right? I know nobody has a crystal ball, but I'd love to know what you think about might happen in 2024, and then even beyond that. You talked a minute ago. You said that in the next 5 or 10 years, in Arizona in particular, you referenced that you feel very good about the appreciation over the long term, right? But with that being said, in the next maybe 1 to 3 or 4 years, do you see a dip and then it going back up?
Sure. I'm always cautiously optimistic. Look, let's face the facts. 2023, was it a great year for some people? It was for some people. It depends. If you're buying diligently and you're consistent in your efforts, good things come. I think, there's been attrition, especially for loan officers, for example. I mean, it's been a very tough year for them. Who's been, how many loans were they deploying? It's been a tough year for a lot of people. No one's really talking about it. But as an investor who's playing the long game, it's been a good year because a lot of people through attrition got nervous about the market and they went back doing their corporate type jobs, which means there's more opportunities for those of us that have stayed the course. I'm cautiously optimistic. We hear about 6 potential rate cuts from the Fed in 2024. The election year, typically rates come down. But again, there's no guarantee in anything. There's no guarantee we wake up tomorrow. I am optimistic about it. I'm always cautious. That's why I always want to continue to buy with equity. I do a strategy called dollar cost averaging, where no matter where we are in the market, I have to have equity in case there's some downward pressure on the market. I'm not really seeing that. I mean, right now it's kind of stagnant from what I'm seeing. My retail listings are a little soft, but again, I'm not worried about selling them because I'm happy to anything that I buy, I'm happy to own. So don't be speculating on stuff thinking, oh, rates are going to come down, market's going to surge, I'm going to go buy this $800,000 house hoping to make $200,000. You can't pivot on an $800,000 house and rent it out and have good cash flow. It's not going to happen, not in today's market. So stick to the fundamentals. That's what I do. I want to buy the lower income, the $400,000, $450 and under type assets that no matter what happens, okay? I'm hoping that rates come down, of course, because that helps me on my lines of credit. It will create more of a first-time buyer and other buyers who've been on the sidelines waiting to penetrate the market to come in. I'm hopeful of that, but there's no guarantee. So all I can do is control the controllable, buy good assets with good equity, as much equity as possible, do a great job on the remodels, be ahead of the curve. I believe in spending the money to make the money. So none of this you don't buy an asset, do nothing, throw it out there and think, oh, I'm going to make a lot of money. Yeah. You need to bring value consistently. Your branding is super important. You want to be top of mind. I think that the biggest thing going into 2024 is, and I'm sure you can concur, is being proactive in your efforts, projecting that stuff. I'm not a complacent guy. I could be super comfortable. I'm not. I always want to be better. I want to refine. I want to maybe bring in some tools to free up more time in terms of management of my rentals, more great relationships, better products. What are the trends in terms of colors and integration, in terms of design for these products? How can we bring the best possible products to the market to engage tenants and buyers? And if you're putting your best foot forward always and spending the money and staying on top of the curves, you're going to do well. That's it.
Yeah. But do you think there's a market crash coming in the future?
I do not see. I'm not anticipating specific to Arizona. I don't see it. I don't feel it. A lot of these most recent deals, people have equity. How could there be a market crash? People, they've decided not to sell. No one's, foreclosures are up for sure. Evictions are up. There's definitely some struggle in the economy. Let's talk about people are struggling. Not everyone in real estate is making all this money. There's a lot of people that have been hurt with inflation. The cost of everything is up. No question. That's why you want to buy good assets that, you can find tenants if you have to pivot if they're not selling. But if you're over speculating and buying stuff, speculating that we're going to, all these things are going to happen, a crash or a appreciation, be able to weather the storm. Where's your umbrella? Where are your gloves? Where's your jacket? And do you have sandals? No matter what the market temperature is, be prepared to pivot and adapt. And if you can prepare for any of those things and stay the long game, you're going to do well. I'm not worried. If the market comes down 10 or 20% or 30%, I'm not over leveraged. So I'm prepared for any volatility. And that's really important.
You've spent the better part of a decade or more getting your entire portfolio really under-levered or hardly levered, or in some cases on a big portion of your portfolio, no leverage, right?
Correct, yeah.
Which is truly incredible. You've actually taken the cash flow in a lot of situations and paid off the mortgages completely, right? I don't know the exact numbers. I think you said on the last podcast, I think you said you had 80 or 90 properties at that point in time that you had no leverage on. I don't know if that number has gone up or if that number is even accurate that I'm talking about. Is it?
Yeah, back in the, I have over 100 single family homes with zero leverage.
Right.
And so if necessary, I could simply, aggregate multiple homes and then, do a cross-collateralization loan on those if I needed capital, but I don't want to do that. I believe in strategic leverage, but I don't want to be over-leveraged.
Sure.
So in a worst-case scenario, I could always get more loans. The banks love you if you're transparent, you're bankable, you're paying the taxes, and that's really important. I mean, came in here yesterday and I bought a deal. A wholesaler called me. He was working on the deal for 2 years. There's something about the ability to always be in control, always having that liquidity ready to go to capitalize on a new opportunity. So some people are, this looks like a good deal, let's jump on it. There's always another deal. You can't be emotional about it. When I interfaced with the homeowner yesterday, I said, you got all these people, but there's all these contingency, the inspections, a 2-week close. You're in foreclosure. You need Definity. I don't need to buy your home. I want to buy your home. You're really nice people. Here's a guarantee number, and I'll close this. I could call title right now, start the documentation, the paperwork, and we can close next week. Here's my number. It's going to be a little bit less than these people, but they're speculating. They're hoping to find an Austin buyer, a Zaback buyer with his contract. They don't have the money. If they do, you would already sign the contract. You were already unsure about it. Here's the definitive contract. You want Definity, you want to clear this up. We're your surgeons. We're going to do surgery right now. We're not going to take you in the emergency room, put you in the corner. We're going to take you in the emergency room and go to surgery right now. With that level of Definity and assurance, you're guaranteed success.
Yeah, you can make it happen.
We can make it happen. I'm not relying on anybody. That's a beautiful thing. So create the ability to have that cash flow, to have that liquidity, to capitalize on amazing opportunities, be ready for those calls. Surgeons are always ready to go in the emergency room. Next patient who's the highest priority, let's bring them in. Let's take care of it. Let's figure it out. And let's stabilize this. It's the same thing in real estate. Be ready to execute without any contingencies. That's the power of bankability.
Sure. Yeah. How do you manage it all? I mean, we haven't talked about it much. You've kind of talked about it, but you property manage all of your entire portfolio, right? Yeah. Which I don't know that I don't think I've ever met anybody, but you're the only guy I've ever met, right? Everybody else, they want to outsource, delegate, and they want to go to the beach, right? And I know your viewpoint on that and wanting to be in the trenches and that whole thing, and you're phenomenal at it. But how does Zach manage his life? I mean, you've got obviously the portfolio, the management of it, the acquisition of new properties, your friendships, your relationships, how do you do it all,
You don't sleep, basically. You drink a lot of coffee, stay amped up caffeine. What you do is you do surgery on these assets. You find really good people that you can work with. I've got great designers. I've got a great assistant. I've got the best handyman in the business. I've got one handyman who services, just under 300 doors. He's incredible. And obviously he gets overwhelmed. Sometimes we have contingency plans. Call your buddy the plumber. Call your buddy the electrician. I have an AC dedicated company in my portfolio. I'm blessed that I found really good people that you treat like family. If you do the surgery in the forefront, you're not worrying about pulling off these Band-Aids all the time. So I'm a firm believer to do the full surgery, provide really good assets. Of course, water heaters, the little things could happen. But if you do a very diligent job on these remodels, you have good fluid communication to your tenancy base, good things are going to happen. My assistant's incredible. We do a lot of things old school, actually. I mean, we use QuickBooks to manage my entire portfolio. We're this year, way over a decade, 2 decades in, we're looking at getting a management software.
Wow.
I mean, it's crazy to even think about. Most people your age, you're like, you're a dinosaur, right? I get it. I know it, but it works. And there's something about that body to body, face to face relationship. I meet all my tenants. I give them a hug. I do a video. Hey, welcome to the Zack Ventures family. People see it. How many homes you rent today? I rented 3. You know, I met meeting the family after family at Starbucks. But there's something about knowing and treating people with the highest level of respect, letting them know you're there for them, and they'll be patient. The thing is, lack of communication, bad things happen. So I'm an over communicator. I let people, they have my cell phone number. They got my handyman, my assistant. We take care of problems. We don't push them to the side. We don't throw them under the carpet. You face, you know, the hardships that you need to immediately, and you spend the money to resolve the issues and treat people well and communicate with them, and good things are going to happen.
Truly incredible. Yeah. Yeah. You know, you talk about a little bit, I guess, going kind of backwards. You talk about doing the right remodel when you buy it, right? I think a lot of people try to cut corners.
Absolutely.
And then they go to rent and they have a bunch of problems, right? But with that too comes kind of, I guess, came another question for me, which is after, you know, building the portfolio that you have and being in real estate as long as you have, I think people might be interested to hear, like, what are some of the things that you won't touch now? Like, after all the experience and like being where you're at, you know, for somebody watching, like, maybe it might be like, hey, I won't touch a pool. Like, I won't rent a pool. I won't touch solar. I won't touch, if it's built before 1950, I won't touch it. I don't want it in my portfolio, right?
Sure.
Like, you know, maybe somebody watching could shortcut some of the mistakes that you made early on.
Yeah. I would buy good assets that don't, you know, when you go out to them, there's not some major structural problem. People say, oh, I could fix this for $25,000 or $30,000. I don't want to buy headaches, right? I want to buy good, solid properties that are solid built, ideally block construction. If it's a newer construction, frame wood, stucco, you know, 1990 and newer, those are always sexy, right? Especially from a Wall Street perspective or a tenancy base. You can live in a 1990s home versus a 1950s home. Most people would prefer that. I don't love solar. I think it's much harder to sell in terms of resale because now it's another expense. People don't fully embrace and understand it. But in the same respect, it's good for the environment, right? So it's a double-edged sword. Ideally, I would buy a 3 beds, 2 baths because those are the most, you know, easily rentable homes with some sort of covered parking. I don't like these conversions with stuff. I certainly don't like buying stuff with bad conversions or non-permitted stuff. All you're buying is a headache. You don't want to buy headaches. You want to buy good assets that will perform for you. Everything is bought at the right price. So if something was done inferiorly or it's a poor addition, you go down and resolve it through permits and licensed contractors and doing it the right way. That's what I've learned. You know, before I'd say, oh, it's got this bad addition, we'll tear it down. You're just buying major problems. I would stay away from that, especially early on in your career. Start doing projects that don't require so much surgery. Do the do the surgery that's necessitated for that project, but start more simply. If you're early on in your career, buy the 1990 and newer with the, you know, tile roof without solar and without pools. It's less problems. Keep it simplistic and don't have these weird additions and problematic floor plans. Walk in the assets and use, the biggest thing I could say is use your intuition. Drive the assets and don't just focus on the address when you're driving through a MapQuest and get to the address and all of a sudden you look up and say, oh, here's the address. I want you to ideally even get a driver or a Uber driver so you could stay very focused on the neighborhood. What is the feeling you get when you're coming into the neighborhood? Where's the park? Where's the school? Where's the community pool? Is that an elementary school around the corner? Great. I wouldn't want to own assets right across from high school. You got these kids running around smoking. It's just negative. A lot of traffic, young drivers. I want to buy elementary schools. I want to buy interior lots away from major roads. And I want to use my intuition. When I walk in that home, what is the feeling that I get? Would this be a legacy property? Do I want to own this asset in 10 years? If my immediate feeling is I'm nervous about the neighborhood, so something was just a weird intuitive feeling about the home energetically, emotionally, whatever it is, it's a pass. It's not just about the numbers. I want to know, do I want to own this home in 10 years? Do I feel good about it? Would I let my mom, my sister, brother, whoever rent this asset? And if the answer is no, don't buy the deal.
Yeah.
So I think that's kind of the most important advice versus overthinking in terms of mathematics. It's not all mathematics. It's the intangibles that are just as important as the tangibles.
You think a lot of people mess that all up?
Absolutely. Yeah. Absolutely. And I think sometimes we're so guilty of it. We're multitasking today. There's so much technology. People are on their phones, on Instagram. They're driving. You're missing the big picture. You're so focused on the micro. Let's focus on the macro. I want to come into the neighborhood. I want to know, are other people updating these homes? I want to know, again, do I hear traffic? I want to turn off my music and be so hypersensitive to what the environment is to make the best decision. We're spending hundreds of thousands of dollars and you're making a decision in 15 seconds. Slow it down, absorb the information, and make the best decision. Nobody's got unlimited, income and assets to, move forward. buy the best possible deals. If you pass on it, it's okay. It's good to pass on a deal. All that means is there's more opportunities coming your way later today or tomorrow.
Yeah.
It's okay. Don't feel compelled just to buy because someone's pressuring you. There's pressure, there's a problem.
Mm-hmm.
Take your time, absorb, make, insightful decisions. There's a lot of money on the table. There will always be another deal. Don't be emotionally vested in anything, but make sure that it checks the box in terms of financially, monetarily, obviously, and then intangibly. Do you want to own this asset if you get stuck with it in the next 10 or 20 years?
Yeah, phenomenal. You think anybody with 10 or 15 years of dedication could hypothetically become Zach?
Absolutely. I'm not the smartest, tool in the shed, the sharpest tool in the shed. I work hard. I treat people well. I think there's an abundance of opportunities. I say it time and time again. If you play the long game, you surround yourself with good people, treat people extremely well, anybody could surpass what I'm doing 100%. I think we all limit ourselves when people say, there's no way you manage these homes. There's no way you go to the gym. There's no way you do all this. I'm just getting started, baby.
Yeah.
And I think we all have this capacity that mentally we restrict ourselves, and we all have this greater capacity. I mean, I think I could manage 500 homes. I really do. No problem.
Yeah.
So we have this cap, this threshold that, you can't do this, you can't do that. We're capable of doing anything that we want to do. And I think all you listeners out there, I wish abundance to everyone. I hope people surpass me. I wish only success for people. Early on in my career, I had this, zero-sum mindset, meaning, I win, you lose. It's all about the money. It's not about that. If everybody wins and the people around you win, everybody gets elevated simultaneously. So I wish people crush me,
Yeah.
Go out and buy these homes and go buy a deal that, you're chasing, you get it. Congratulations. There'll be another one for me. And if you have that mindset, there's an abundance mindset. There's enough for everybody to eat, more than enough for everybody to eat. But put in the work. It's not going to happen by being passive.
Yeah, truly phenomenal advice. I totally agree with you. I think at the end of the day, we live in a world full of a bunch of people that they think like you used to think, right? They think scarcity.
Totally.
And you see it every day, man. I witness it. I see it every day, and I'm like, gosh, I just wish I could get that out of your brain. Like everybody can win. There's so much to go around, right? So I love that you said that. What is like the ultimate goal for you, right? I mean, like where now, I feel like, you're at a point where like you could just chill, right? If you wanted to, not that you ever would, but what is the ultimate goal? Like why do you get up in the morning? Why do you do what you do? Do you want to get to 500,000 doors, or do you want to eventually travel the world? I mean, what's the goal? What do you think in the next 10 or 20 years?
It's so funny. I think about that all the time. Even going back to yesterday where I had the time where I interfaced with homeowners directly and buying a deal, I just love it. It's in my blood. It's about the deal. It's not about the money. It's about solving the problems. I'm blessed that I love this business. I love the transformation. I like the engagement of design, actually. I've got some very exciting stuff that I cannot talk about right now, but you will see. Probably in January, February, it's going to be massive for my company and career. It would be very, very exciting. But I'm just blessed that I enjoy what I do. If it ever doesn't become enjoyable anymore, then I'm out. I'll find another entrepreneurial endeavor. But I'm blessed that I love being the captain of my domain. I go to the gym, bring that positive energy. Just keep growing this thing and see how robust this thing can get, and continue to have fun watching the transformations. I'm speculating a little bit. I'm doing a massive build with London Pierce and Candace in Paradise Valley right now, so that'll be interesting. We're about to tear down a cool house. It was 3 years. Talk about delayed gratification.
Wow.
I bought this home on Valley Vista 3 years ago. We finally got the approval to move forward with multiple design iterations. Talk about pulling out your hair. I mean, I'm spending cost of capital on the table, $10,000 a month in carrying this thing, and 3 years later, it's $300,000. I got nothing to show for it. So talk about negative cash flow, but appreciation. There's a perfect example. But having the ability to just do some more diversified projects. And I'm open to anything. If someone's got some entrepreneurial idea, continue to have fun. But really engage these. I mean, you're 28 years old. I'd say I'm jealous of what you're 28. I'm jealous. You're ahead of the curve where I was at 28. There's no comparison as a thief of joy, but I wish abundance to everyone. I always interface with these young, lads, these guys and gals that want to do what I do. And I love, that's kind of my legacy, is helping these young entrepreneurs grow their portfolios, give them any advice that I have. I take the calls for free or FaceTimes. I like doing that. That's truly your legacy, is helping other people change their financial future, their families in some capacity.
Which is so cool. I think at the end of the day, like what I love about real estate and even in asking you, like, can anybody do it, right, is I already know the answer. Anybody can do it, right. and I think it's the reason I got into the game. When I was 18 years old, I just I knew like, I wasn't the smartest guy in the room. I didn't have any money, I didn't have anything really going for me at all, but I knew that I could get into a game, I could work my what off, and I could eventually make it, right? Yeah. And I think is one of the reasons why I started the podcast and we do what we do, right? Is just to share that with the world of like, and I try to portray that through a lot of my social media. Is like, look, like I'm just I'm like the most normal guy in the world, right? Like I feel like you're smarter than I am, but I just work my what off, right? And I'm nowhere near where you're at it, but I do have big goals and ambitions, and I think when I'm a little bit older, I definitely will be, and I hope that a lot of other people decide to do that too, Yeah.
For sure. I mean, it's interesting. I hear all the time, Zach, what's your favorite book? What's your podcast? What's this? What's that? My favorite thing to do is taking massive effing action. Yeah. Okay. So it's like, I'm not, my dad laughs. I've read 2 books my entire life, the Isaiah Thomas story and Who Moved My Cheese, I think, because that's about 30 pages. And I have ADD. I think that at the end of the day, I mean, you're a good looking guy and you have this drive in you. If you're willing to put in the work, you can own as many homes as you want. Yeah. The money follows the opportunities. Get out in the field. Stop being passive behind the computer screens and fearful. Take the action. And the capital, the opportunities, the relationships will always be there. Treat people extremely well. Be transparent. Be vulnerable. Be honest. And good things are going to happen. That's it. There's no secret recipe to this pizza. Here's the ingredients. Put it together. Put in the work. You bake it. You make it.
Truly incredible, man. It's a wrap. How do people find you?
It's
a mic drop right there. You know what I mean?
They can follow me on Instagram. Cool. I think it's under the Zachary Kepes or ZAK Ventures. You see a picture of me and my dog. I got 2 beautiful dogs. My sons love them, Onyx and Buddy Jones. Yeah. Pride and joy. Connect with me on there and slip in my DMs. You have questions, happy to answer. And I'm just grateful for the listeners for this opportunity. I want to see you crush it. I look forward to wakeboarding with you,
for
which
sure.
we talked about.
Come whenever, bro.
I love it.
Really, we have the boat up at Lake Pleasant, and you're always welcome. Yeah,
thank you. Yeah. And when is this gonna air?
Probably Moshe will be able to tell you. Probably a week or 2. Okay. Yeah.
I was gonna.
They're all going on my main channel now too, and then obviously they're on every app. Like podcasts and Spotify and all that. Yeah.
I'll say this. Everyone's talking about right now. It's the very end, right before pre-Christmas 2023. Everyone's like, what are your goals for 2024? What's this for the future? What's 5 years? You know what we can focus on? Today. There's opportunities today. I'm still grinding. I mean, I think the key is being in perpetual motion. Once you're stagnant, it's hard to get in that drive mentality. Be in perpetual motion. Put a lot of things out there. Multitask. Stop playing this passive, small mentality. Play big. Get after it. I got a week and some small change left. I plan on buying a couple more deals and driving, getting a couple rentals done. Like from here, stay in that perpetual motion. Yeah. Focus on today, and tomorrow will come, God willing. But control what you control and move forward today and just take that massive action.
That's great advice. Yeah. Yeah, everybody's thinking about tomorrow. Nobody's living for
what are you going to do for fitness in 2024? What's the goals this? No, I'm focused on today. Today I'm going to run 5 miles. Today I'm going to walk my dogs. Today I'm going to go buy a house. I want to rent 2. I'm going to focus on today. Yeah. Tomorrow's tomorrow.
Sure. Yeah, so be in the moment, man.
Be in the moment. Yeah. Grateful for this. The energy is always out of control here. I love it. These guys are incredible over here. Your whole organization. Your fiance is a sweetheart. She's like, Zach, when are you free? Well, Christmas. We got to get you back on the podcast. I mean, she's in perpetual motion. I'm not going to take no for an answer. I love that. That's a perfect embodiment of, an amazing future partner for you.
I appreciate that, brother.
You guys are going to be a killer team.
I appreciate that. Yeah. She's the creative director. So any piece of content that you see that gets put out on the internet.
Incredible. Shout out to her.
These 2 guys obviously behind the camera, and then she's the one posting it all, though. She writes all the captions. I mean, she puts it all out there, and she takes great pride. And nobody better to do it really than her, because she knows me at the highest of levels. So she knows what I'm cool with putting out, what I'm not cool with putting out, right? Yeah. And, she'll always try to make everything look good and feel good. And she's truly awesome. So I appreciate you saying that, man. Yeah. And are you with anybody right now? You have a girl?
Got a girlfriend. Okay, I'm dating for, I met her after we met on a Bumble site, and we'll see what happens. Good? She's a smart, wonderful lady, and blessed to have her in my life. And we'll see what transpires, just kind of taking it day to day.
One day at a time.
One day at a time.
One day at a time. Hey, maybe in a year or 2 from now, I'll have you on the pod, and you'll be further along in that.
God only knows. Yeah. We'll see.
I appreciate you, Zach.
It's easy to commit to real estate for me, right? I can make a, vulnerable. I can buy a house in 3 seconds, right? Well, to find that life partner, it's always been a difficult thing for me, vulnerably. But, God willing, we'll see what happens.
Well, the house you can sell, right, if you get tired of it.
That's true.
But the moment you get married, man, you're there.
You're committed.
You're there. You don't want to get divorced.
No,
I'm like you, bro. If when I get married, that's
One
it.
and done.
One and done.
That's what I'm at.
One and done.
Yep.
You know, I hate the data, the whatever you see in the world, 50% divorce, 80%. I mean, it's just terrible,
yeah.
So I appreciate that about you, and I love that about you. Well, I appreciate you. We'll put all your information obviously down below. We'll chop this up into a million different podcast clips. Cool. It'll go super viral, and you'll have to manage all the comments. I'm sure we'll get a little hate, but we'll get more love than we get hate, which is all good.
All good. You know what? Part of, the whole energy thing and working out and being your best being is deflection, right? There's always people that are upset in their lives, and there's people that have their things going on. We can't control. All we can control is how we respond to certain things. I don't see any hate. I wish only abundance and blessings to everyone else. If someone hates you for being successful or hates you for working hard, that's on them, But we always have the ability to deflect. You don't have to embrace that. I want to embrace positivity and deflect negativity. I think that's one of my superpowers of being able to manage the day. Think about, you have a lot of tenants. There's always problems. But are you letting that stuff penetrating you, or can you deflect it? Once you start engaging it, and it's you're engaging that negativity, you're wasting your energy, right?
Agreed.
I'm going to embrace that positivity. I'm going to manage the negativity for whatever it is. Control what you control, and let everything else go.
Comment down below if you agree. Phenomenal. Appreciate you, brother.
Appreciate it.